I'm going to officially call the meeting to order. And then I'll just say to consider an act on bids received for the sale, $28,395 general obligation bonds and $13,855 general obligation bond anticipation notes. Do I have a motion to approve? Jimmy makes the motion.
I'll second it.
Second. All in favor? Aye.
Aye.
All right. Batter up.
Perfect. Great timing. So we're down. We have about 45 seconds until bidding opens. Just a couple of things to note for those of you who have been through it or not. Bidding will open, and you're not going to see like 10 bids come in right away. We could be sitting here for 10 minutes. I'll be doing color commentary, making jokes, talking about the weather or whatever, and then we'll start to see some action. And as the action happens, it happens real time on the screen. We don't have to click refresh or do any of that kind of stuff. So we'll kind of just see where bids are, see where people come in. So oftentimes the first bid might be a little soft. You know, they'll come in and kind of see where they play out. And then towards the end, depending on how things shake out, we could see a little bit of a frenzy. A couple of years ago, if people recall, and this was 2 or 3 years ago, I mean, we had a scenario where like the bid went well beyond 11:15. And the reason for that is this particular platform, it is an open auction format. It allows for an extension of the bid. And sometimes it works, you know, in terms of sometimes a bidder will come in and they'll be right at the point where they think they're willing to go, and then they'll realize that now they're not in first place anymore, they're in second. And they might say, you know, we have these orders we really want to fill and da-da-da. And then they'll improve their bid, and maybe they go into first. In that event, if it's within the last 2 minutes of the bid, so from 11:13 on, if the winning bid's overtaken, it automatically extends 2 minutes to the end of the bid. So it basically gives the other bidders 2 minutes to respond, to improve their bid, to go over the top aggressive, whatever they want to bid, you know, whatever they want to do. And we might go to 11:16, or a couple of years ago we went to like 11:28 or something like that. It just was like nonstop bidding. And you never know. I mean, it's exciting. At the end of the day, yeah, you probably saved a couple basis points, so it's great. And it's exciting to see that these, you know, bidders, on this list down here is the list of kind of who's been looking at it. I mean, Citi, Fidelity, FTN, JP Morgan. You know, these guys are paying that much attention to a sale that's really not a huge deal in the overall scheme of things. I mean, they'll be bidding on potentially, deals that are 200 million, and this is less than 30. So much less for them to make, but the fact that they'll be engaged on it. There's also a scenario where, you know, Citigroup could come in with their best bid and walk away and win the bid on their first bid, no extension. Less exciting from a spectator standpoint, but it just means that they were, you know, aggressive and they put their bid in and they had other things they had to do. So it's not really indicative of a good rate or a bad rate. It's just indicative of, you know, other things that they have working on that they're interested in or they're buyers on that particular day. So we're live now. It's 11:02. Bids will start rolling in shortly. To give an idea in terms of, you know, where should the interest rate be, or you know, where have we sold it in the past, et cetera, et cetera. So we sold, and in this package here, if anyone wants to follow on, or I can just speak to it. There's the screen from the last bond sale we did, and it was June 30th of 2020, and we had Raymond James with the winning bid at a 182, and that's the first there. And if you can see, if you wish to kind of look across, it says bid number, and it was there. They put one bid in and they won, and that's on this page right here for anyone who's paying attention. And it says one bid. Now, Janney put in 4 different bids, and they improved their bid by 4 basis points. FHN put in 2. So it just kind of tracks like how many times they're submitting their bid. And in this case, Raymond James put their best bid in. They won. That was it. And there was an extension because they put their bid in at 11:14, so it went to 11:16. And that's it. So
what are you expecting this time?
That's a great question, Tom. Perfect question.
Yeah.
Great segue. So June 30th of last year, rates were low. As we remember, the market was still pretty volatile. We're going to be lower today. That's the expectation.
1.8?
Yeah. And 1.8 might have been the lowest rate. And I'd have to check, but 182 is among the lowest rates probably ever issued by the town of Fairfield. So if we all remember this, and we would have talked about this last year, in March, everything blew up, the world was gonna end, it was apocalyptic, and everyone was gonna die. And then here we are, you know, a few months later, we're issuing bonds at a 182, when 3 months prior to that, you couldn't even issue bonds. Like, the market froze completely. Bids weren't even coming in, we had to cancel everything. As we recall, we had the refunding that we had to postpone. And now we're in an environment where we'd seen, you know, the 10-year treasury had gotten down to like 0.52 or whatever, and it had never gone below a 153. So we're at like a high 140s, 150 ballpark now, but the difference is, A, you have a super stable market, and B, the municipal market has been extraordinarily strong over the last, 8 months. So it's performing better relative to the treasuries than it ever has. Municipal ratios are as strong as they've ever been, which is kind of interesting, but I think it's just there's a lot of money out there, and these credits, they've noticed that these municipal credits have held up. There's a lot of strong credits out there, and as a result, you're seeing a scenario where you have a 10-year treasury, let's say at a 150, just for argument's sake. You have the 10-year MMD is like 1%. So it's basically saying that an investor is willing to accept 1% on, let's say, a town of Fairfield, because it's MMD is a AAA generic yield that's put together every day. So they're willing to accept a 1% on a tax-exempt AAA versus a 150 on a treasury. So if you let that sink in, we're talking about the U.S. Treasury that prints money, and versus a small, local town situation where typically that ratio is like 80 to 95%. So if it's a 150, you're talking about maybe the MMD should be a 140, 135. It's 1% or even like a little bit below that. So super, super strong muni market. And as a result, even though that 10-year treasury is kind of probably in the same ballpark of where we were at the last sale, we're going to do, in fact, the treasury was probably quite a bit lower when we did the last sale than it is today, but yet we're going to sell at a lower overall interest rate, most likely. So it's a little weird, it's hard to digest, but that's where we are. Good for the town, obviously, good for issuers, and it's a nice time to sell for sure. So, any questions? I'm talking a lot. Getting dry. So
these interest rates here, the highlighted column?
Yeah, so that's...
Stanford got a 0.92.
Yeah, so one thing that's important to note here, and we'll just flip ahead. So it's very hard to read in small font and everything else, but we've got to pack in a lot of info. Yeah, in that red bar chart, there's it shows the true interest cost, so basically equivalent to the 182 that we were talking about, for local issuers in Connecticut over the last 12 months. So most recently, down below Windsor, sold at a 140. Okay, you say, well, that's way lower than a 182. Well, it was a 15-year deal if you look over to the left. The Wilton sale, and we did most of these, Wilton was a 0.90, but it was 11 years. And it was, and this is 20. So this is like a standard 20, very plain vanilla in terms of rate. If you were to ask, what's the 20-year rate, this would be a good one that you can tell them, after the fact, because it's got a lot of the these 15-year and 11, 12 years, most of those are refundings, and they're, heavy in the first 5 years, and then they drop off. So they're like apples and oranges. I think 1.5 is probably not a bad guess. I'm just trying to look up here just so we can follow along. Like the Orange, Connecticut deal that we did not long ago, it was 20 years, but it was taxable. So it was a 205. And they bought Baseball Country Club. And then we go up to Westport at 161. So that's probably our best comp at this point. AAA, it was 11 million at 20 years. I can't remember this off the top of my head, rather, but it was probably a little bit front-loaded, so maybe that pulled the rate down a little bit. So, everything else being equal, we should be in that ballpark, maybe 160 to 170. We might go below 160.
Groton did 18 million in 20 years, and they're a AA.
Groton they're a AA plus, yeah. So they're only one notch below.
So they got a 157.
They got a 157.
The first column, that S&P, and the second column.
No, the first is Moody's, S&P, Fitch. So interestingly, yeah, they have a AA from Fitch, which we didn't do that deal. I would drop that one. No, there's no need for it. It's just $25,000. What do you think? But anyways, Yeah, so there's a lot of moving parts here, but it looks like 150s, 160 is probably where we should be today. And if it comes in at a 152, we're all gonna be happy. If it comes in at a 152, we're gonna be even happier. But, I mean, the bottom line is, you have the guys lined up, we have a real stable market, you're AAA, it's a good size, you have a lot going for you with the sales, so we should have some really good results. I'm getting some feedback. And for those who care, the notes are on the next page, and, I mean, we're gonna be, I don't know, 20 basis points maybe, 0.2, 0.19, 0.25, whatever. That's this page, it's a little bit easier to read, because there's a lot less going on. So that is that. If anyone is concerned or interested,
It's Jess Kennedy.
we move along into some of these charts. I'll pick out a good one that we can share. One that's kind of interesting would be this one right here, yield curve. For those on the, can't really see it. But anyways, this is the yield curve. So this is the municipal AAA tax exempt yield curve. And if you look at the red bar with like the little squares in there, that's the current curve. So that's what your bonds are priced off of. A month ago, you have the goldish, yellowy kind of bar. And then if you look at that green bar from a year ago, which is right about when we sold the last Fairfield bond, you can see that short-term rates were a little lower. Longer term, as you go out kind of past the 10-year mark, a little bit higher. And these bonds typically have more weight in terms of the overall interest rate because obviously it's longer term. So we're quite a bit, 10 or 15 basis points lower there, and we're maybe, 5 or 6 basis points higher in some of the shorter stuff. So which I'll take any day because, again, like I said, those longer bonds have a bigger impact on everything. But, that's kind of where we are. And if you look, I mean, that's between current a month ago, 2 months ago, a year ago, I mean, there's some spread there, but it's not a ton of spread. I mean, we've been in a really strong environment, like I said, for a while here. Now we got our first bid. Look at that. Perfect timing. I just finished what I was going to talk about here. And then we have it on the screen. Perfect timing, UBS. They must have heard me. So we have one bid in, and I'll just make this a little bit bigger. Okay, perfect. Without shrinking the font down. So you can see they put it in a bid at a 197. Like, that's not going to win. So they're probably here to play, a little bit here and say, okay, I'm going to put this bid in, see where things shake out, and then we'll get aggressive towards the end and see where everybody else comes out. I mean, FHN at a 190. There's nothing about this deal that would lead me to believe we're going to be anywhere near that high of a rate. But, we'll see where things go. And like I said, we definitely should beat the 182 and be, below that as well. So this is the fun part. We all sweat a little bit. Palms get a little bit clammy. We'll be good. We'll be good. We have a lot of good bidders here and a lot of good action. And like I said, yeah, so they already dropped down to 196. And on this page here, this just shows all the deals selling competitively in the United States. And fortunately, there's no other Connecticut deals selling, so there's really no competition.
Hey, Matt.
As far as these five. Yes.
Hi, it's Jess Kennedy. Good morning, everybody.
Oh, hey, Jess. Good morning. How you doing?
Good morning. Can you just have everybody identify themselves for the minutes? I can't see clearly.
Okay. Jess, mute your phone.
Oh, horrible echo.
What's that?
Thank you.
Jess has to mute her phone. It's a really bad echo. I don't know if it's the same for you guys.
Okay, Jess, we're going to go around the room and identify everybody with the town. I mean, I'm here.
I'm Tom Bremer. I'm the Chief Administrative Officer for the town.
Chris Timniak, the town treasurer.
Jared Schmidt, Chief Fiscal Officer.
Brenda Kopchick, first select woman. Caitlin Bosky, the controller. And
I'm on the phone. It's Nancy Lefkowitz, Select Woman.
Okay, so Selectman Flynn is absent.
yes.
That's an affirmative on Flynn not being here.
Okay, thank you.
She's in the tunnel. So we have 4 bidders up on the wall here, and we have Piper Sandler with a 185. So they've come in pretty strong, you know, at least relative to the other folks. And I think now you'll see the others will start to chase.
Matt, you just said
And
4, I see 6. Am I
maybe you're,
7?
bidders, but
Wait,
total bid.
well, yeah, 4 bidders. Yeah, 4
Oh,
separate
got it.
bidders.
Okay, just got it.
Yep. Yep. And there's a few others that have not joined, and there's no obligation or guarantee that they will. But you have, you know, Citigroup here, JP Morgan. Okay, Robert Beard has entered the room at a 182. So that is the almost exact rate that we sold at a year ago. And, you know, you think about life and the world and what's happened in the last 12 months. It's like all this craziness in the markets and all these things. And here we are, like, the municipal market is like the same, almost the same exact rate as we were a year ago. It's just kind of weird how that sometimes works out. But now it's like, it looks like we have a real party here, and we have Robert Baird again still in first.
Real party.
Everybody, I think everybody's in the room now.
And you could already see on top where it's extended the, so we're within-
Oh, yeah. Okay.
So now every new bid is gonna add 2 minutes to that.
Oh, okay, that's how it works.
Yeah, so now is when these guys down below start to really scramble if they think, I mean, yeah, Citigroup's going around, they're at a 193. I mean, they would have to, if they're going to tinker around, they're just never going to get up there, even Fidelity at a 188. So, I mean, Robert Baird at a 182, you know, it is the strongest bid here. I think there's definitely some opportunity to go lower, and we'll see if anybody here wants to participate in that. I think it potentially could. And I would think it should, personally. You know, and that's the thing too, some of these terms, when you look at a 20-year deal, it could have, you know, a lot of 10-year projects in there so that it pulls the average life down, so it gives you a low rate, even though it says 20-year. But, you know, again, I'm thinking we should at least get into the 170s, but we'll see. No guarantee in life. So we have about 15, 20 seconds left. And we'll see if, like Janny, they know they're the cover right now. And maybe they're just waiting. They know they're in second.
They improved by about $50,000.
If they
Yeah.
make a bid, then it extends again.
It's when so they just.
Okay.
They
Just
got it in.
Whenever the lead changes.
Yeah.
So, yeah.
104.
So Janny just overtook Robert Baird, and now we go to 11:18. So it's 2 minutes from that bid.
Wow.
And now Mesero is in.
Wow, Metro.
And you can get a sense of, on this page here, all the winning bidders, you know, the last couple of deals. It's JP Morgan, Robert Baird's been real active, you know, Fidelity, Citigroup. We got,
These last couple of years on here, would the town just refinance that? It's a better deal for like the final 10 years, 6 years?
well, there's a lot of different moving parts. I mean, we did the refunding last, well, we were gonna do it right when the pandemic hit, and we ended up doing it like in, whatever,
Yeah,
April, May or something.
Yeah.
So we captured any bonds that were currently callable at that point.
Right.
And our next call date is like next year. So we really can't do anything
But
now.
on this issue we're going out here, when we get to the point where the curve's lower, those would already be.
Oh, right, so yeah, if everything stayed the same and rates, let's just say rates, the curve stayed exactly the same, and that's just how the municipal market works. In an ascending curve scenario, you get out, you know, 7, 8 years, you get to the call date, you're refunding these bonds with these bonds. And yeah, exactly, that's exactly how it works. Now, if it was a flat yield curve, that scenario doesn't work. But in this particular curve, which is like the normal scenario, it would. So potentially we could refund these in the future.
Conversation, the 2-month curve would be better for the town than the current curve, for market time.
Oh,
Blue line,
so if we're looking at when was the exact perfect, no, not necessarily. I'd say actually now is better because you have the red bars here that go out from 10 to 20 years are lower than all the bars. And that's, you know, that's kind of what holds a little bit more weight. 4, 3, anybody? Oh, 180, so we did beat the other, we didn't get as low, maybe as whatever, we maybe thought we would have, but 180 beat our last bid, so we're still at the lowest probably rate in the history of time for the town of Fairfield.
That's awesome.
And, you know, the fact is you had all that action. So you know that you got the best bid on this given day because you had all these bidders, they're all tripping over each other trying to improve their bids, and ultimately Janney Montgomery is the winner. So we could click on this, and it just shows here now where we are. So we have, in all, we got 34 bids. We got Janney improved their bid twice for a cumulative 2 basis points. Mesro was right behind. They only needed not a lot. I mean, 2 basis points, a full 2 basis points is a pretty good win. You know, it's not as tight, you know, that Janney's not going to be, you know, they don't want to win by 10 basis points, but they, you know, if the second place bid is really close, then they feel like, oh crap, you know, $1,000 more premium, I could have won this deal. And that's not quite the case. So they're all going to be happy. Janney's been real active. They bought a lot of deals. We work with them a lot, so there won't be any issues there. And then they get an email out that they're the low bid. So now we just need to make it official. What happens now is Riley is going to verify that this Janney bid equates to a 184,706. And then I can, let's see here, click on the best bid. And you can see here what the, you know, coupon rates are. Again, you know, doesn't mean that much to you. This 5% applies just to this bond, you know, just to this bond. And as you go out, we get into the longer end. And Chris, to your point now, you know, in terms of refunding potentially, I mean, these are all 2%. So if we're refunding 2% bonds in 8 or 10 years, like, I'm all for that. Because that means, you know, just more deals and towns save money and everybody's happy. The rates are going to have to be stay real low or go up and then come way back down. We were doing refundings of clean water fund loans with the state of Connecticut that had 2% interest rates. We did a bunch of those recently. So it's not unheard of, but it's probably not.
So am I looking at this list right now, seeing Westport got 1.6 in April for a 20-year, $10 million deal? That's a big,
Is it a 20-year deal?
20-year deal.
Yeah, so they got a 20-year deal.
April was way better.
Well, April was somewhat lower. Somewhat lower. Again, the structure has a lot to do with it in terms of if they have more bonds in the front, even though it's a 20-year deal. Like, they're usually Greenwich is a good example on here because they do 20-year deals, but, well, they only went out to a 14-year deal, and they did it at an 86, and they did a 5-year deal at 18.
January. That's months ago.
Yeah, no, it's definitely a little bit higher than a couple of these other deals, but it is what it is. It's the market at the time. You're never going to know exactly, and rates are low, so, you know, in that regard, it's a little bit higher than that, but still.
That's the best we've done as a town, but yeah, I don't want to throw water on the timing.
Well, I mean, we have notes coming due, and that's the timing. You know what I mean? Like, that's kind of how it works, and you never know where he's going to. Some of these are bank qualified, which is important to note as well, which lowers the rate at least, you know, 15 basis points or so. Like,
how do you get bank qualified?
You issue less. You have to be under 10 million for the year, which Fairfield's, at least from what I've seen, it's going to be a long time before that happens. But there's a possibility that the feds raise that ceiling to 30 million, but I don't know if they will, and it gets diluted if everybody's issuing and there's just more bonds in the market. So I'm going to go back to this other screen here, just so you can see the premium, so you know what to do. Oh, okay, good. All right, good. We'll verify. All right. So, okay, so just so you know, and this will be on the closing memos and everything else, the Janney Montgomery bid, the premium is $2,195,000. So on closing date, you get the par, so the 28 million change, plus the 2 million, which is what brings that interest rate down to 180. Because if you didn't have that premium, your interest rate would probably be like 3%. So they use that because the bonds are more marketable as premium bonds. And then you just have to allocate them, and bond counsel will get involved with that potentially. So we're good here, and you're going to pay total interest of $5.5 million on the 28 million. So you're borrowing 30 million, you're paying back about 5.5 when you account for the premium, and that's pretty low.
When's the next bid start? 30? 30?
Yeah, about 7 minutes. Yeah, 11:30. So we need to make it official, and I know Jess is going to want that to happen, and we are verified.
Yeah,
so it'd be a
sorry, I'm
recommendation,
trying not
obviously.
to talk because I know I sound like I'm in a tunnel.
No problem at all. So we just have to have an affirmative by the group here, and Just-
Okay,
Accept it.
so,
Yeah.
motion to, should we actually put it in? Do you want to help me with the motion? Do we actually say what it is?
Oh, I don't know, Jess, you have the thing if you want to read through it, I believe, or maybe you don't, I don't know.
Yeah.
Yeah, but she's got to hit unmute.
So Jeff needs every person to say their name and whether they accept or not. So
Yes,
Brenda,
yes,
Jared,
yes.
Okay, so, Brenda Kupchak, I accept.
Jared Schmidt, I accept.
Chris Timiak, I accept.
You're up, Nance.
Nancy Lefkowitz, I accept.
Thank you.
Perfect. So we can go on to this screen just since we have a couple minutes, and you can see what the investors are willing to take on these bonds. You know, the 180 is important to us because that's what we award the bid on. But as far as the investors that are buying these, they could care, like that's why the true interest cost, the 180, isn't even put in the official statement anywhere. It's a meaningless number from an investor standpoint. All they care about is coupons and yields. So if I'm interested in buying the one-year Fairfield bond here, I can get a 5% coupon, but I'm paying 104% of par because clearly rates aren't 5%. Rates are driven by the Treasury curve, the MMD curve, and you're going to be getting 0.15. They can accrete and amortize the premium, and there's accounting benefits to that. And, you know, they stick these things in a fund, and the 5% helps it. And there's all these things that are going on behind the scenes. But basically, you got a 15 basis points. If you want the 1 year, you have to go about 8 years out to get 1%. So if you're willing to lock your money up for 8 years, you can get 1%. If anyone's, you know, interested, it's a really good deal for the town. I don't know, but, you know, hedge funds and insurance companies and banks and things of that nature will buy these. And if you are willing to go out the full 20 years, you can get 2.1%. And get a 2% coupon for the next 20 years, tax exempt, which is good. And then that's it. So that kind of is in a nutshell, the bonds. And it wouldn't be a bad idea for me to call this guy quick to let us know. Let's see. It's Matt
I always
Davis.
have trouble finding it, but it's Matt Davis.
Yeah.
I have the number.
Yeah, I'm gonna call Matt just to get, are you gonna just email him?
Yeah, I can do that.
Just email him.
Yeah, very
Because you have all the, we work with these guys all the time. So we're gonna email, and we'll copy bond counsel, so Jess, you'll see this, of course, and the town will be copied. So it'll be, basically that it's official that the town accepted the bid and all that kind of stuff, and then they'll say, oh, you know, I need the distribution list, which will already be on there, and we'll have them, you know, they'll ask if the amount's gonna change, which it doesn't. So just a couple little things that you'll see on the email that isn't super interesting, but it makes it official. So we're gonna send that out. So Jess, be on the lookout for that, because I know you need that. And,
Thank you.
yeah. So we're gonna go back out,
The next one starts.
and the next one starts pretty soon. Okay, so bonds. Okay. And just, since we're killing time, we have, you know, if you go up here and someone clicks on the terms, it'll give them, you know, the ratings and, you know, the dated dates and when the bid time is and things like that. So just kind of like a quick summary of all the information, which is good to have. There's links, which I don't need to click, but this is the notice of sale, which is part of that official statement that bond counsel puts together that has all the terms, the POS, and ultimately, well, that's just their request to bid, which we don't need to do. And Riley, you can put in this again, since I guess it took it off. No strings attached. For that. Not bad. Okay.
What do you expect for
Beauty.
participation on the notes? Is it
I mean, it's notes.
less competitive?
Oh, yeah, definitely. I mean, on a bond issue, so let's just round these numbers off. You had $30 million. The winning bidder is probably gonna get, I don't know, anywhere between $3 and $5. On the low end, that's 90 grand. On the high end, that's, even if it goes to $6 a bond, 6 times 30, so there are potentially $180,000 they can make on the bond issue. And that's all built into the rate, so it's nothing that you pay or anything like that. On the note side, I mean, they might make $2,000, maybe $5,000. If it goes to 10, I'd be surprised. So they don't spend a lot of time on it. They'll put their bid together. There's like 2 or 3 buyers of these things, Fidelity, Vanguard, Dreyfus. That basically they could just say, hey, listen, we got this Fairfield bid. What do you want on it? Someone else will call and say the same thing. And we're not going to see people tripping over themselves. It's $13 million, so we'll get some action, of course, and we'll get the bids. But yeah, it's not going to be quite as exciting as the bonds. I'm trying to see if last year we sold notes, which is this other page that looks similar, at a, where are we? 0.38. So 0.38, we got 5 bids or 6 bids, and it was TD Securities, and we will be below that as well today. Another thing too that we have to keep in mind that is moving interest rates is all the talk about inflation. And the Fed just met, so these are probably things I could have said maybe 10 minutes ago when we were getting through the bid, but now it's just coming to me. So all the concern about inflation, and then the Fed comes out, whatever it was last week, and it was basically saying, we're probably going to increase rates sooner than we thought, not go out to 23, maybe it's before that. So that stuff is like more important potentially than actual data, because that's like expectation. So that hits the market pretty much right away. So that probably also would push the bond rate up maybe a little bit more than it would have been even a couple of weeks ago, because it was really, we were in a stance, I think, if you go back a month, 2 months, where oh gosh, no inflation, no growth, none of this. Fed's going to keep rate. Yeah, Fed's going to keep rate, 0 for the rest of our lives. And then all of a sudden, you look at the equity market, things are doing well, price of everything's going up, building, and all this stuff is happening like maniac. So that's definitely having an impact. We got a bidder on the screen, Piper Sandler at a 0.16. That's a pretty good rate. Not a bad start. Yeah. So that that could win. He might have just come in and say, here's a 0.16, we got to go to lunch or whatever, because they're not going to sit around here and clown around on 8 bids to make $2,700 or whatever they're going to do. So. Let's have some time. Let's see what else. And the note market today is quite a bit leaner than the bond market was. It's only about 8 or 9 sales today, with the big one being Quincy, Massachusetts at 121 million. So not a lot of supply, which is always good for sales. And this is probably the most important chart as far as, tax-exempt municipal rates go. This is more for the bonds. But you can see this spike here, and we've been through this before, but this spike was Armageddon, like the days and weeks after, March 13th. And everything, the only thing people wanted were treasuries. That's it, or cash. Munis are like the next best thing, and nobody wanted that, so that's why these things all went out crazy. Then we went down to an all-new low of all time. We sold right there, and we're, we're kind of up here, so 10 or 15 basis points higher on the 10-year, which if you look at a 20-year bond, it's got an average of 10 years, kind of like a mortgage. Mortgages are like priced off the 10 years because that's like their average, life when they actually are out there. So higher MMD, but a stronger municipal market that made that rate still be a little bit lower than we sold a year ago. And we've really been in this little range for quite a while. And who knows, again, as more inflation talk and as more things support the Fed raising rates sooner than later, We could see that slide up because this is an unsustainable scenario for, for too long, so. We got 3 bids now, a grand total of 4. Jeffries came in and they're chipping away a little bit. I will say, I mentioned that there's not a lot of money to make here, et cetera, but these are the note guys, so they're used to this, so this is their thing. It's not like it's the same guy doing a bond making $200,000 that has to do this. So these are the note guys, and these are the guys we see on pretty much every deal. Jeffries buys a ton of stuff. So I wouldn't be surprised. They might tighten that up a little bit. You can see they're tightening up and sharpening the pencil a little bit. So who knows? Maybe we go a little bit lower.
How's the coupon interact with that? 1%, 2%?
So interesting thing is there are times in the market where you have a scenario where all the coupons are the same. They're all 2%. And that's usually indicative of the fact that they're probably talking to the same buyer. They're probably all talking to like Fidelity. Fidelity said, I want a 2% coupon, give me the best deal. And they say, all right, and then they work this firm, they work that firm, and they all have to squeeze their spreads. In this case, clearly you have like a 1 and 1 1/4, a couple of 2s, so they're probably talking to different people. And there's other buyers out there, which is obviously good. I mean, either way, it doesn't really matter too much.
A new winner.
So now we have 15 basis points, and we still, interestingly, have 10 minutes to go. And they're already kind of, jockeying at this point, which is kind of interesting. Yeah. So, shall see where we go from here. Last year, everyone put in 1 bid. We got 5, which is interesting that JP Morgan came in. I can't remember why they show up twice on that. But at any rate, it shows 5 bids with 5 bidders. We're already double that, which is cool. And we're at a rate that's less than half where we were. Let's see, so on this, in terms of interest, you're looking at, say, 14 million. So 1% of that would be 140,000. Go down to 10, so maybe like 20,000. You're looking at interest. I mean, probably right around there at the current level, and that's with a. So you're probably, remember now that when you get billed interest, it's gross interest based on the coupon. So at a 2% coupon, it's actually a much higher number. It's like 280,000. But then you have the 254 that you have to apply to that next year. So when I say, oh, you're only paying 20,000 interest, you can't take that premium and use it for whatever. Kind of have to allocate that for when that comes due. Bank of New York really spending some time on this. 8 bids already? 8 bids? There's no way they're going to catch Jeffries at this point. Do you remember what we put in for the waterfall?
For the van?
Yeah. It was probably like 0 point something. And even the bond, I'm wondering.
2%, I think, was our.
Not bad. Okay. Yeah. And I mean, we're not even halfway through. Well, we're just halfway through, I guess. But.
Only 4 on the auction page, and they've all put in bids.
No. Yeah, the one thing, because when rates get really compressed, particularly like on the note side, it kind of has
Put in another bid, Mellon, and they
and
move them.
they're chipping away like half a basis points at a time. So you better clear his calendar for the next
They got a long way to go.
7 minutes if you're going to do this. But in a low interest rate environment where there's super low spreads, where these guys can't really make money, notes are always done, I mean, for the most part, competitively. We've seen over the last, few years of a handful of firms that have gotten out of the business completely. So you have potentially less bidders, which is never good. Nobody likes that. And usually when someone goes out, somebody else comes in, fills a void. But like Eastern Bank, for instance, I mean, they bought, I don't know, there was stretches of time where they'd win 5, 6 in a row. And so they were like the biggest note buyer in the Northeast. And the bank was like, we're not making a lot of money on this. And they just got rid of the group, which is pretty wild. That was, I don't know, 5 years ago, 4 years ago, 3 years, something like that.
Yeah.
So we've seen some of that over the years with the notes. Now on the other side, with bonds, as rates are compressed, spreads are compressed as well on the competitive side. But again, we talked about refundings. When rates are low, there's more deals in the market because issuers are doing refundings and they're doing them competitively. They might be doing negotiated. But the bottom line is there's more potential deals. So you'll see, I mean, like UBS got out of the business a few years back, and then they've kind of got back into it. And other firms like FTN we see involved, and we, a bunch of these other firms that are RH Stone or whatever. Like, there's like all these firms that have just tried to get in because they're like, oh, look at all these deals. The market's issuing more bonds, than ever. But that's like, well, when rates start to go up and those deals go away, then you'll see some of those guys, close the shop or somebody get moved or whatever, which is unfortunate, but it's kind of how the market is at this point and how it works. So we'll see where it goes. But fortunately, there's plenty of buyers out there. There's a lot of investment money out there, and there's just a matter of getting it to those investors. So the difference, with these two bids, the only two that you can really look at as sort of apples and apples are the 2% Jeffries and the 2% Bank of New York. So you have about not even 3 basis points difference between the two. So it's the same coupon. So then what's the difference? Well, the difference is in the premium. So what Bank of New York needs to do right now is they need to increase this premium by, $3,500 and whatever dollars, and they win. It's as simple as that. Like bonds, a whole different thing. There's 20, different maturities. There's, all these different things you can do. But when you look at notes, you can kind of boil it down to that. So they're about $3,500 difference, which is a $3,500 difference in interest between those two bids. So if you're going to extrapolate that out, this bid's kind of in the middle, but closer to the winning bid. The difference here might be like $1,000, or even $800, who knows? But Piper's not. Maybe they just said, this is our bid. We win, great. We don't, fine. This is as low as we'll go with our, what we're willing to accept to underwrite it, and we'll see where it goes. So now we got 9. We got about 3 minutes to go. Oh, while we're here, so your people's bank account, all that stuff's the same. So that's where the money will go on closing date. So as we get close to that time, you'll see in the next 2 days or so, we'll have the official statement that you'll all see. You don't really have to do anything with it. That's more for the underwriter and for bond counsel to just make sure that everything's in there correctly, because no town info would change. So you'll see that, and then we'll get the closing memos out like a week later, because we don't close until July 9th. So you send it out too early, people will lose them. So we'll send out those, and then it'll be an email that'll say, on the 9th in the morning, make sure you check the account, email us to the effect that you've received the funds, and we can actually close. So, and then I'll go through people's, unless, you tell me otherwise. So that's just housekeeping stuff.
Matt, it's Jess. Can I mention one housekeeping thing? And it sounds like I'm not in a tunnel anymore.
Yeah, you're out of the tunnel. That's great.
I'm
You gotta
out.
stop
Sorry
talking with a
about that,
megaphone.
everybody. I don't know what was causing it. Nothing changed. Oh, well. I just wanted to talk about logistics for signing the closing documents. So I'll probably try to get them out next week sometime. And I know last year we did a little remote coordinating because everybody was sort of home. And is it safe to say that everybody will be in town hall at some point, like mid to late next week, or even into the following week? Because I know Brenda, Jared, Chris, Nancy, all of you have certain documents that will need to be signed for the closing. So I just want to gauge if anybody's away or everybody's kind of around. I can direct everything to Caitlin to receive it, and then we can give you at least like a week to sign things up.
I can
I'll
come
be
in.
around next week.
I'll be around next week.
I'm always around.
Great.
Does not look like you'll have a problem getting signatures, so that's good.
Okay, good,
Yeah, so
thank you,
TD
everybody.
TD, no problem, Jess. TD came in, they're in third place. 2% coupon, so we can just look over to the premium and you can see that they're about $1,500 off. Another 1,500 and they're the winner. And about a minute to go. So it's gonna take a little doing to get this to be extended. I don't think Jeffries is gonna get overtaken, but of course I hope they are. That's always fun. We need a little excitement in our lives here. At least in town hall, it's, you know, maybe outside it's a little different.
Oh, there's nothing exciting going on there. It's very boring.
No,
Boring is good.
true.
We have a motto around
Why
here,
would they put a bid in?
right?
No,
Right,
no.
Bremer? We have a motto. What is it?
I don't know.
Does it ever end?
Does it ever? What else? to
Definitely
do?
not.
Does
What
it
else
ever
to
end?
do, right?
Yeah.
True. Why would they put a bid in with a minute to go that is not winning?
Try to sneak in.
But I mean, you're not winning.
Well, now you're not winning, so it's like, oh, well.
Yeah. Oh,
They
yeah.
Well,
won.
they weren't watching?
Well, they can't, they only can see their own rank after they bid.
Oh.
They can't see anything else.
Oh, I see.
They don't know the rate, they don't know who's bidding, they
They
don't know.
don't.
All they get is rank.
What do you mean, right?
So it'll say third place.
Third place.
Oh, so you don't know, if I go up by $1,000, I'm a winner?
No, that's why you see like Bank of New York going up, like, if you could see everything, then it'd be a waste of everyone's time. But yeah, they only get rank.
I got
So
it.
they could be 10 basis points away, or they could be $1 away, you never know. So, yep. All right, so we got Jeffries at a 0.156851, which Riley will verify, that we are good. And
Did everyone go around the room again?
this is the best bid. Let's see here. This is this. Okay, so, you can see 2% coupon, premium 254, 659. Riley's gonna say, we'll verify it any second. Again, this is another measure to make sure that the calculations are good. We are good. All right, so Jess, we're all verified at the, Jeffries bid here, and it's our recommendation to accept this bid, obviously. It conforms to the notice of sale, and it's the lowest net interest cost, and it would not be a great idea to not accept it. So we should make that, and everyone should go around the room and say you accept the bid, if you feel that it's in the best interest of the town.
Brenda Kopchick, I accept.
Chris Timiak, I accept.
Jared Schmidt, I accept.
Nancy Lefkowitz, I accept.
Great, thank you, everybody.
Okay, so it is official. We're gonna send again, similar to the bonds, we send an email out to everyone, blah, blah, blah. Did anyone get back to you, from Jenny on that?
No.
All right, it doesn't matter, they're good.
You think we're doing another bond sale this year?
Unless, you know, something comes up and the town wants to go crazy with new projects, we're not gonna be doing any refunding this year. Unless, unless there's a legislation change in Washington that allows you to do tax-exempt refundings, tax-exempt advance refundings, which has been talked about for the last 2 years, it just hasn't happened yet. If they do that, then we can pull potentially bonds that are further than 90 days from the call date and refund them, but at this point, we cannot do that. So I doubt it. So most likely next year, unless something major changes, somewhere along the way. So, that's it.
Good stuff.
Yeah.
All right,
thanks for coming.
can I
Good to
have
see you,
a
as always.
motion to adjourn?
I'll second.
All in favor?
Aye.
Thanks for coming
All
on,
right.
Nan.
Bye, thank you.
Thank you.
Okay,
Have a good one.